Good morning, good afternoon. My name is Eva Szalay, and I'm Currencies Correspondent at the Financial Times. And we'll have a quick chat with the Global Head of Foreign Exchange at Citi, Itay Tuchman. Itay, Citi is considering crypto. Can you tell us a bit about that?
Sure. Well, why don't I talk a little bit about why banks and why banks like ours are starting to think about, and I say that starting to think about because it's the start of what I think is a fairly long and you know iterative process around digital assets in general. But fundamentally, if it's about clients. Our clients around mid last year really started to approach banks like ours, and I'm sure others, to say, are you thinking about crypto? Can we access crypto markets through you? What are the needs that we have that we would like big banks to provide? I think there are a couple of streams of that. Custody and safekeeping being one, dealing and sort of market access and facilitating making markets in digital assets another. Financing, some clients already have fairly substantive holdings of crypto assets, have been in the space for a while and want to unlock financing or yield. So there's been a couple of different threads that again really started around mid last year and only accelerated into the first quarter of this year. And I think that's really what's brought us, into thinking about, cryptocurrencies and digital assets.
We'll sort of try to touch on the various strands, but what would be really interesting to hear from you at this point is, what kind of clients, client demand is a very broad sort of concept, isn't it? Can you tell us a little bit about what types of clients have been coming to you and why they've been coming to a bank when there are quite large crypto native companies out there who can do all of those things that you mentioned?
Look, great question, Eva. So there's a lot of different strands of clients. Like the first wave, the early movers were definitely your sort of family office, maybe ultra high net worth, and then sort of like very forward-thinking macro hedge fund type clients. But that is really broadened out to all number of client types, including large institutional investors and institutional investment asset management firms. Up until even to sort of like some sort of sovereign wealth type folks. So it runs the gamut of clients that at least want to have a dialogue with us about this. And the reason they want to come to a bank is because there are parts of this ecosystem that maybe they would prefer or think about a bank as being able to provide in an easier way. Like I think the world of some of these crypto native firms and their capabilities, not just on the retail side, but also on the institutional side. But for example, like if you're an institutional long only asset manager, you might have 1,000 sub accounts in a particular fund, the Wisconsin Retired Teachers Association or whatever. And they have specific documentation needs, onboarding needs, and we have those capabilities to interact under the hood with big diversified financial services and asset management companies that banks can do. So that's maybe the trading infrastructure. The second bit is this custodial infrastructure, where a lot of clients tell us, we want our digital assets to live next to our sort of traditional, I don't know, maybe TradFi assets is the best way to say that. So equities and fixed income assets, we want them to interact. We're not planning to move our bond portfolios to Coinbase anytime soon. And you have a big, long established brand. We've been banking with you forever and we trust you. And we know that if something goes wrong, you will be there for us. And this is still quite a new ecology for a lot of clients. And so that brand value also, has a lot of clients saying, can you help us in that particular space?
What does that do to your relationship to other banks and crypto native companies?
Look, great question. So we are not a crypto native firm. We're never going to be a crypto native firm. And we look at these firms very much as partners. Maybe future partners is the best way to describe the way that I would look at them. And again, like it's different parts of financial services companies, and I don't speak for all parts of Citi in respect of that. But a lot of these firms have fantastic capabilities, fantastic data insights, large crypto businesses, crypto holdings, and they think about, what do they need from a bank, and then what we might need from them. in some future date we trade, Bitcoin tokens themselves, we'd want to trade them in the places that are liquid and that we feel are safe and sound and have good infrastructure. And there are a number of, there's a lot of the ecology of crypto, which, maybe doesn't suit a bank like ours, but there are a number of very well-established crypto firms that are regulated, that are well-governed, that have risk and control infrastructure, have all the things that a bank like Citi or like any, established regulated player might want to see and look at. And then there are things that we might say, hey, for this to work for banks, you might think about this type of architecture. I mean, a good example for that is like for us, we really do API through fixed connectivity, and some crypto firms don't have fixed connectivity, for example. So we might say, hey, in the future, and this is not something that is going to happen tomorrow, you really need a fixed API if you want banks to be able to integrate with you easily. These things are non-trivial. Why don't you think about working on that? These are the kinds of conversations that we have.
What's sort of, I mean, I think it's not a secret that Citi has lots of technologists, right? You guys have talked about it in the past. So can you talk me through a little bit about the process of what a large bank goes through when looking at this space? Because on the one hand, I imagine that, you've got all those tech brain people who are able to grasp, what the technology does, how you can maybe use it and do funky stuff with it. But then I guess you have traders, you have compliance departments, you have all these different silos. So how long is this process, do you think, will take? And how does it work?
I have another fantastic sort of under the hood question. So, banks have humongous technology architectures that have built, evolved, innovated over decades, right? And our hope and desire is to try to reuse as much of that as we could, because that gives us the scalability that we produce. Like in foreign exchange, our ability to reach 70, 80 plus countries with technology architecture, with common tools, like it's part of our huge value proposition. And like in the ideal world, we can use some of that. We don't need to rebuild everything crypto native from scratch. Now, like admittedly, blockchain technology is very different as an architecture, but there are pieces that we hopefully can leverage and use, whether it's things like a single dealer platform that allows execution or other sort of workflow infrastructure. So the first thing that we think about is, okay, what are the sort of steps around products that we might want to offer? By the way, there's a whole angle here around making sure that our regulators are comfortable and support all of this, and these things, we think about these things in parallel. So what's easiest, right? What are the things that, I mean that from an infrastructure and technology perspective more than a transactional perspective. What are the things that maybe our regulators, want us to start with, rather than let's go and offer market making on the 1,000th new altcoin? That's a consideration. How do we build risk and control infrastructure? Because safety and soundness is paramount for regulated financial institutions like ourselves. And it's not just because our regulators expect it, our customers expect it, our brand depends on it. And so we think about what do we need to do on the risk and control side, and we kind of frame out and we try to say step by step, how do we look at the next few years? What do we use and reuse and sort of slightly re-architect to be able to do crypto related? If we get there, what would we have to build from scratch? What would we want to partner with a crypto native technology offering? Because some things are well built in the crypto ecosystem and we might want to use a vendor. And we map this all out, and it's quite a complex architecture. Some things, and you've seen banks, other banks, make comments about things like Bitcoin NDFs, and it's something we're looking at as well. Those things probably can do a lot in terms of reusing a lot of the existing architecture. But there are other things, if we're going to actually eventually move digital assets around, there's still plenty that needs to be built in the banking, traditional financial services infrastructures, which will be much more sort of new technology. So there's a combination of recycle, buy, build, rent on the technology side. And again, we have a number of people who are very, very blockchain literate and aware, but also, we also recognize that, for a lot of developers, and we have a lot of great non-blockchain developers, this is a new infrastructure too, and they'd have to think about.
Can you, before we sort of move on to maybe the regulatory side, just to lay the ground, how nervous is your compliance department about all this?
Look, I think I wouldn't use that term at all. Like, I don't think the word is, how nervous are they? I think
They're
everyone
always
from,
nervous, aren't
no,
they? The
no,
compliance people, they're
I
supposed to
think we
be
all
nervous.
are. I think the modern bank has everyone focused on risk and control. Whether it's someone like me that runs a big global business, whether it's a trader who works a couple of layers down from me, whether it's a compliance officer, a second line function, or risk and control, or an in-business risk function, or an internal audit function, like we are all focused on doing things properly in the right way. And, I think there are parts of the digital asset space that bring new challenges in risk and control. Like, so, I mean, as an example, this is just an example, like AML KYC is just different on the blockchain because, it's not purely account based. And so, a lot of folks are learning very quickly, and we're working with, natively crypto firms to educate and to understand how is KYC done on blockchain versus in an account-based system, which is sort of the latent financial system. So there's a learning curve for all of us in respect of this. But as a lot of people say, I think you've seen a lot of very senior law enforcement people, financial crimes people say, done properly, and I say that with an important caveat, done properly, blockchain can be better for the prosecution of financial crimes and for catching nefarious actors because everything's visible on the public blockchain. So there are positives here potentially done properly, and I think again, I certainly wouldn't characterize that our risk and control partners as sort of like coming at this with a nervous. I think everyone comes into this, whether they're business owners or risk and control partners, to say how could we do this properly and what would we need to do this properly and what are our standards that we will not drop. Just because something's on a blockchain does not mean that we endorse sort of anonymity and all this kind of other stuff that I think it's a lot of hype in the crypto space.
If you look at the institutional crypto space, and maybe not just banks necessarily, but your clients, the sort of large asset managers or big clients, traditional clients that you mentioned, what's the biggest risk for them with crypto?
Look, one of them is not having an offering, frankly. I think it's well understood that a lot of asset management companies, not all of them, by the way, say, well, if we don't have an offering here, we're going to lose assets to people who do have an offering. And if this grows, and again, nobody has a crystal ball in the future, but if all assets or lots of assets get tokenized, or this ecology starts to sort of like merge in a way with the traditional financial ecology, we want to be able to do that. Like, we don't want an underlying investor taking their AUM and going to one of our competitors that can handle that. So there is this sort of, on the asset management side, there is this, I think, growing belief, but not ubiquitous. I want to say that again, not ubiquitous, growing belief that sort of you need to have an offering here because clients are coming to them, asking for it, wanting it, and expecting it. And again, similarly for banks, like, it's client driven. It's clients telling us, hey, there are areas here that we'd like you to participate in. So I think that's one big component of sort of risk, which is, if this continues to accelerate, making sure that you have relevance, which is kind of like a business risk. And then you have sort of like this kind of under the hood operational risk and control risks that everyone faces, whether you're an asset manager, whether you're a crypto. By the way, crypto native firms face this all the time. Crypto funds face this all the time. They spend a lot of time and energy and money on making sure that what they do is safe and sound too, right? Because again, like the tokenized infrastructure is different than account-based. Right. So in account-based, you make a mistake and you can just sort of like change the ledger on the account. Right. With tokens, I think that this bearer bit is a bit overplayed, frankly, but it's much more final. And finality is a very good feature of blockchain infrastructure if you use it for the right things. I say to a lot of people, like, boy, settlement risk can disappear in financial markets if we use finality in the right way with this kind of infrastructure.
So before we sort of move on from risks and regulations, can you just talk us through how you see the view from regulators and central banks evolving? Because that must be surely complicating matters for you and for everyone, in the institutional space thinking about crypto. How big an uncertainty is that? and how do you best to try to navigate it?
Sure. Look, I think it's well known both in digital asset circles and in financial markets writ large that the regulatory perimeters here are yet to be defined fully. And I think one thing that I think we share with the best crypto firms is that everybody wants those to happen, because it's just hard to sort of make the kind of medium-term business planning that we would want to do without knowing where those perimeters sit. And I really feel that regulators have figured that out and are, endeavoring to bring that kind of certainty to the marketplace. Okay, it's not immediate; it's not going to happen tomorrow, but in due course. So I'm quite positive on regulatory dynamic. Of course, like you want to know where things sit, but like for example, you saw the Basel Committee put out a consultation on prudential treatment of crypto for comment. And these are the steps that you want to see as regulators start to define appropriate regulatory perimeters around this new asset class. So that's a good thing. And I think there's lots of discussions in terms of what Chairman Gensler is going to do and all these other components. And then there's the global side of things, the non-US side of things. So there's plenty going on in that space, which we welcome. And then you have you said central banks, which I think has a slightly different flavor here, which is really where you start to think about sort of the monetary side and the monetary transmission side.
What will that do to the foreign exchange business, for example?
Yeah, and central bank digital currencies and these kinds of dynamics, which are more than how do we handle Bitcoin, right? And I think that's another very, very interesting space, and it's very clear because you've seen tons of sort of central bank digital currency acceleration. The central banks have started to really sort of speed up their thinking around CBDC and what they want to do, because this sort of private non-central bank system is growing. Stable coins are one of the fastest growing payment rails. I should say quote unquote stable coins are one of the fastest growing payment rails out there. And so you see central banks now really accelerating the CBDC dialogue, which again has potential to completely re-architect markets like FX. I mean, maybe it doesn't, maybe it takes a long time. Maybe traditional side of FX lives alongside sort of a growing CBDC side, but I'm really excited about what that might mean for a foreign exchange industry.
In terms of just a few minutes ago, you mentioned, when we were talking about the process that institutional companies are going through. What are the chances do you think that this all goes away? Suddenly, this client demand, this rush, everyone's halfway through building this infrastructure, thinking about, how it's going to change the world. And then suddenly clients are no longer interested. Is that at all a scenario that you think could happen?
Personal view, Eva, near zero, right? And I think digital assets have already become established as an asset. Now, any one token, any one altcoin, any one network that loses any interest or adoption could evaporate. I think the chance of many of those happening is very high, right? Like for we won't end with 5,000 versions of Ethereum. Like the network effects will mean that some of those things will grow and some of those things will shrink or disappear. But the idea that like you can have a digital ownership through blockchain of something, whether it's a sort of a piece of network value, whether it's a tokenized, replace kind of like an account in a way to do something that we're comfortable with, just like an equity or a fixed income instrument. I think this is growing and this is here to stay. Now, obviously the architecture might change, but look, if the internet fails, of course, digital assets fail. But I think that if that happens, it's more catastrophic than potentially anything else that could happen. So I don't really like to think about those types of things. But this has already emerged. That's why I called it an emerged asset class, not an emerging asset class, because I really think more and more people are becoming comfortable with blockchain-based representations of value, and that really is what's driving the interest here. And again, that value may be a share of Amazon, or it may be a dollar which transfers itself on a blockchain rail. I mean, that value can be different things. And any one of those things may not end up taking off or may end up growing and accelerating to a much bigger scale. But I think the concept is here to stay.
In terms of, you mentioned there's a lot of hype, and I don't think it's a surprise to anyone, but how much, where are we in terms of the phases of evolution? Are we still in a bubble?
Look, I mean, I don't like to say we're in a bubble because I don't think it's a very easy one to know when you are in a bubble. And a sort of bubble is one of these things that says somehow like the like sum total of the market is like grossly over perceiving the value of something and we'll never get back there, right? And so look, was Bitcoin in a bubble at 60 odd thousand? Who knows? Like, I don't make any price forecast predictions. I have no clue personally what some of these things, are sort of fundamentally worth. I don't think like the digital asset ecology, the idea of tokenized infrastructure or blockchain rails and infrastructure personally is in a bubble because I see more and more investment in it. I see more and more establishment in it. So more and more people using it and saying, wow, this is better for that particular use case. It's not better for all use cases, but there's some use cases where it's better. I mean, I was mentioning to somebody that, I went to Wembley Stadium on Sunday to see England play in the football, and most people don't know that the UEFA ticketing system is actually based on blockchain infrastructure. So the ultimate user, to me, with my ticket on my phone, which is a digital representation of a physical seat at a football stadium, I didn't even know it was blockchain until I dug into it and saw that there's a blockchain behind it. And maybe it's helping them slightly better manage ticket fraud and all this kind of bad stuff. So that is not in a bubble because there's more and more use cases that are developing, right? Is some, random coin going to be worth zero in the future? Many will be worth zero. So that's my answer to the sort of like, is it in a bubble? No, I don't. I personally don't think so.
Okay. So where does that leave banks and asset managers? Because it is, if the technology is, the real deal, it is supposed to eliminate the need for banks, asset managers, central banks, all sorts of centralized entities. How do you sort of square that circle of being a bank trying to use that technology?
Look, I think that, of course, there's a huge innovation in decentralized sort of financial services. And then there's this sort of like libertarian originals around, we never want to use banks. But look, I mean, most of the Bitcoin which is traded in the world by far is traded in centralized financials. Coinbase is a centralized infrastructure. Other crypto exchanges are by definition centralized. There's some DeFi activity out there. But boy, for something that has a lot of hype about that, there are a lot of centralization in the ecology. So I really think a lot of that is just hype. There is room for large scale companies that act as central pieces of ecosystems to help make things better, even if the underlying technology is based on a decentralized public blockchain or a decentralized permission network, private blockchain. You already see that. And so I think there's plenty of room to play. We have customers coming to us saying, you make our lives easier as one of our central customers. Make our lives easier here in this digital asset space because we have people who want to invest and we want to be able to support them. And I think for some parts of this, that will work very, very well. So I think it leaves our customers and us in an ongoing dialogue about what can we build that really adds value. We don't want to build things that are just, sort of, okay, they look like what a crypto native firm does. It doesn't do it nearly as, there's no real point in that. We're going to add value both to the entire ecosystem and to our customers. We want to do things in a way that are well-governed, safe, and sound. So we want everybody who is a customer who might eventually come to a city to transact in a digital asset or to interact with a blockchain to say, wow, I know because of that company does things the right way, that they're going to satisfy my expectations around safety and soundness, right? Which isn't just about making sure that my crypto, my Bitcoin is there one day. There's so much more that goes into that about how we think about safety and soundness across everything we do operational. Like I'll give you one example, right? So, and this is not, again, to cast an aspersion on anyone. It's hard. But, when you see humongous moves in cryptocurrencies, you saw the big Bitcoin sell off from a few weeks back, a lot of exchanges go down.
Yeah.
You can't transact, you can't send money, you can't get out, you can't get in. It goes down. Now, in some cases, they come back up very quickly, in other cases, less quickly. Like for us, that's safety and soundness. I mean, we take very, very seriously these things like system stability. And in foreign exchange, our goal is to never go down. That's our
Oh,
goal.
if only
Right.
equity markets. Yeah.
Right. So like safety and soundness is not just, is my Bitcoin safe on the blockchain, or does somebody else have access to my private keys? It encompasses so much more around the ecosystem of a marketplace. And it means the standards that we set are very, very high. And we are very committed. We're not going to do anything in the space that doesn't meet those high standards.
So do you view yourselves as a bit of a gatekeeper?
You mean for clients or for?
For clients, but also, for the exchanges or, the institutional. I think one of the issues for the cryptocurrency industry is it's very short actual fiat currencies, aren't they? So, and so that situation puts banks into this very specific situation as a gatekeeper. So do you see that evolving in one way or another?
Look, I'm not sure I would call what I see our role is as a gatekeeper. I mean, we want to facilitate value add for clients in respect of that. And if that means we can integrate with something and we can be their synapse, okay, you might want to call that gatekeeping, but I just think that, it's a synapse. Like in a way, for example, like banks offer prime brokerage services in foreign exchange and other asset classes, and that's a synapse. Allows the clients to interact with a diverse liquidity pool in an efficient way. So those are things that clients value. I mean, a lot of clients really value having one big bank relationship that they use to access lots of liquidity, lots of capital, capital efficiency, operational efficiency, et cetera. So I don't think we're a gatekeeper. I certainly agree with you. The crypto system is, very, very short fiat currencies. But part of that is, what we were talking about at the very beginning of this conversation, which is that, there has not been a fully established regulatory perimeter that allows a lot of that fiat to come in. And I think that over the next few years, I think it's quite likely that that perimeter will be better established. And then you'll see, balance sheets, which are, let's say, bigger and more liquid, like large banks have, maybe look to facilitate activity in the crypto space. But I think that still, there's still plenty of steps to go before that is simple and straightforward. And I don't view that in terms of our role, therefore, as a gatekeeper role. I mean, we're in, we hopefully can provide our own products and services, but also, good, infrastructure to access, what will probably remain a very fragmented liquidity and ecology in all markets, to be honest, traditional markets, but also in digital asset markets, because it's evolved that way. I mean, liquidity is all over the place in crypto.
I guess that's why it's such an exciting market, right? Is so many opportunities. Before I let you go, just a quick question on trade markets and crypto. How much of an influence do you think crypto has on trade at the moment, and the other way around? And how is that something that you think will grow in correlation? What will that do to the whole narrative of crypto?
Boy, if I could spend half an hour on that question alone. It's a fascinating question.
You've got 2 minutes.
Okay, 2 minutes. So by the way, I call it TFI. I think a lot of people call it TradFi, but in just sticking with the single syllable, I call it TFI, DeFi, and CFI. So one of my real big beliefs is that these things will start to converge in ways. So for example, crypto or digital asset markets or blockchain can solve settlement risk for traditional finance, for TFI. And that is just like an unbelievably positive dynamic. Imagine if everything was DVP with almost no cost and therefore no risk. You give me the minute the equity, we atomically swap the equity token for the cash that you paid to buy it. Nobody has settlement risk. I mean, that will solve a huge problem for traditional financial markets. As you said, crypto markets need fiat. There's it's really fragmented. Capital efficiency is very poor in the crypto space. You have to pre-fund a lot of exchanges. So maybe, the balance sheets of traditional finance will help make that more efficient. And maybe customers will want to do things like stake cryptocurrencies someday through a traditional finance provider, and that will have to integrate with both DeFi and CeFi. So these things, I think, over the next few years will come together to solve problems. But I don't necessarily think that all of a sudden every bank becomes only, blockchain, or that all of a sudden, crypto exchanges are just listing equities, or become, traditional market players. I mean, these things will exist in a complicated ecosystem, but I think there will be quite a lot of linkages between TeFi, DeFi, and CeFi, and ultimately, like, that will help users and customers interact across this financial innovation, which is what this is. It's a huge financial innovation, and a different way of thinking about marketplaces. And so, I mean, that's why I love this market, because it really offers a future which is really exciting and different, and can help make things better, help lubricate things that are inefficient in the current system. Even with CBDC, if we can get unbanked banked, if somebody who right now can't get a mortgage because they can't get a bank account because they're in a country that they don't have ID and things aren't easy, look, maybe in some years that person will be able to access the basic financial services that you and I take for granted, and help us build our financial lives, and help us do great things. And so I really am kind of inspired by this innovation as an innovation for good. Of course, everything comes with speculation and volatility and all these things, because it's so new, it's so innovative. There's a lot of uncertainty. Nobody knows how everything's going to play out. But I try to sort of look through that and ignore that, and think about the big picture here. And the big picture is there's a positive benefit that this innovation can bring to the world's consumers and the world's investors, and do things that are more difficultly done in TeFi. So hopefully that will happen.
Thank you. Well, unfortunately, we have run out of time, but I hope this was useful to our listeners. It was. I really enjoyed it. So thank you so much, Itay, for your time and for your company.
And Eva, thank you so much. This was real fun for me, and for everything you do and write at the FT and on FX. I know we're not talking about FX, but thank you so much.
You're just making me blush. Thank you, guys.
Thanks again.